So do you hear me now? So sound was there on the TV, on the trading view. Yes, sound was there, so it wasn't there on the trade on the YouTube. So I just fixed that. So I didn't check that. Thanks for a reminder. Okay. So I hope that you guys hear me on the YouTube. All right, so I don't think so. I need to repeat that thing again. All right, so let's just straight away go ahead. So as I said that on 16th of March, we're going to have Fed rate decision on 16th of March, okay? And last week, non-farm payroll numbers were so strong. And that's simply giving a reason for the Fed to raise the interest rate in the March meeting, all right? And ahead of that, as I said last week in the weekly market outlook, that we were expecting dollar to retrace up to 70%, all right, up to 70% of this previous bullish move, right? Because other central banks were setting up for, you know, hawkish too, like ECB said that they're gonna raise the interest rate maybe in 2022, all right? And Bank of England has already, you know, hike the interest rate, okay? So that's caused the dollar to go down, all right? So till you know 16th of March, you know, everything is just clear for the dollar to stay strong, all right? Dollar has almost done its bullish, it's bearish daily correction, okay? Now it's setting up simply for another leg higher, okay? And as I said in the previous, you know, analysis, that we are expecting the dollar to tag this previous top, okay? So just go and break above those previous pandemic prices, okay, in longer term. That, or in or if central banks are going to make a mistake or error, okay, then dollar index can rise significantly for more upside. All right, so what you are looking simply for the next week, if I'm gonna pull out some of my indicators, okay, like I have previously shown you, dollar index to stay above those moving averages, okay? So the previous move, if you do remember, so similar again, dollar index to just simply stay above those daily moving averages, okay, and hold that daily moving average. Do not break down those moving averages, okay? So dollar index to just stay above that you know, moving red SMA, smooth and moving average. So just stay above that and continue the bullish trend for more upside, okay? So if it pulls all the way back to that previous low, so still gonna be a buy opportunity, okay? This is not going to change that, you know, direction, okay? So we are not simply expecting this ascending channel to break down for more downside, as there is no reason or logic, okay, for dollar index to break down. So everything is just simply super bullish for the dollar index till you know 16th of March, or you know our whole year 2020. We may see strength throughout the 2020 on the dollar index, okay, but not, you know, a sharp strength, as I said in the last weekly market outlook, a sharp or crash, okay? So like that, not expecting that kind of crash, okay? That can happen only then if we are going to see policy mistake from the central banks. Then dollar index gonna continue to keep pushing lower aggressively. So hope that makes sense now. What is the place to watch for the week, for the next week, okay? So that previous low are right now at the current price, okay? Price to just hold these daily charts and just continue to keep pushing more higher. So if I'm gonna look at the lower time frame, okay, where the setup's gonna be over there for next week. So if I'm gonna look at the 1 hour time frame, so setup is going to form over there already. Setup is just simply setting up over there, okay? When market gonna open, you are simply looking this correction to break out. Price can slightly drag lower for another leg, okay, back to that previous low, okay? This is gonna be a buy opportunity. Your short-term target gonna be that high, right? If it is not testing this previous low, then watch it to break out, okay, and break out that top and continue to keep pushing more higher. So I'm anticipating it to just correct, okay, correct after having, all right, so after having you know, this the breakout, okay, this move, breakout and correct over there. So that correction can retest that test that previous low again, okay? So this is going to be your short-term trade back to that low when market gonna open, all right? And if you're gonna see another correction after hitting this previous low, all right, then let the moving averages come out over there, all right? Let the price go above moving averages to hold that correction there. Okay, once moving average is going to hold that correction, you are looking price to continue to keep pushing more higher. So this is going to be a, you know, slightly technical on lower time frame, 1 hour time frame. So once price going to break out, going to form that correction, all right, then watch it. So if you are not understanding that on low time frame, just simply stick to that daily time frame, and you are looking for that to continue to keep pushing more higher all the way back to that top. All right, so that's your dollar index. So that's what we were expecting on the euro too. All right, so last week we were expecting euro to pull back up to 70%, and on lower time 70% retracement. So it has retraced more than that. Okay, so you know, short term, you know, we were expecting short term continuation on this time frame. Okay, not expecting it to drop significantly to the downside and give us a retracement up to 88 70%. All right, so 70%. So it has retraced more than that, so 70%. Okay, so there is the 70%. So we were expecting at least 70% retracement on the euro dollar. So it has retraced more than that. So what it is setting up for now, okay, we are not simply expecting, guys, this to do something unusual. Okay, unusual gonna be like that. This is not going to come out. Okay, this kind of move is not going to come out because you know why we are not expecting euro to do something like that kind of behavior. The reason is very much simple. Okay, we're gonna have more hikes from the Fed as with compared to the ECB. Still there's gonna be a lag between the ECB and Fed gonna hike more as with compared to the ECB. So ECB may have one hike during the 2022. All right, so Fed is just simply setting up for at least 3 hikes. All right, market is expecting at least 5 hikes during 2022. Yes, if we are going to see 5 hikes, this is going to be a super bullish story for the dollar. Okay, and euro dollar not going to break out for more upside, even though yields are pushing higher in the Europe. Right, still those higher yields not gonna give strength to the euro during the 2022. All right, so it's going to be a bullish story for the dollar, not the euro. Okay, so any pullbacks on the euro dollar are going to be a sell opportunities for downside. Okay, as long as Fed is sticking to their hawkish policy, hawkish stance. All right, so hope that makes sense. Okay, fundamentally why we are still sticking to the euro to just stay below, I mean the moving averages. All right, this bigger downtrend is still being held. All right, this longer term bearish trend, price was just simply correcting back to those moving averages and just staying below those moving averages. Okay, so previously we were expecting it to drop from there, and it's testing that again. Okay, so this is going to be the opportunity for till 16th of March. All right, till next month. Okay, go up to this low, or I'm expecting it to break out. Okay, so this is not going to drop in a day or two. All right, so they're gonna be almost 5 to 6 weeks. All right, so we are having 5 to 6 week time over there. Okay, and this is obviously going to take time, almost a month or month and a half. All right, a month and a half. So this is not going to drop in a day or two, or at least in a week. So it's going to take some time. So make sure you understand that. Okay, so if it is going to drop in a week, you're gonna be lucky. All right, but make sure you are preparing for that. There are gonna be multiple opportunities on lower time frame once price gonna start to drop. So for next week, the opportunity you are looking first, all right, so price to visit that previous low, that's gonna be the short-term opportunity, or short to medium-term opportunity. All right, so price to fall back to this previous low, and in best case scenario continue to keep dragging more lower. All right, so we may see a pullback once price gonna test that low. What kind of formation gonna be over there, we'll see then. But right now you are looking price to just simply drag and test that previous low. Okay, so if I'm gonna pull out my pound dollar chart, okay, so you're gonna have this kind of, you are simply looking that kind of move when market gonna open. All right, so there is the flag broken out. All right, so you got that 4 hour time frame flag broke out too on the euro dollar during the ECB rate decision. Okay, so you got a flag there, you got a flag there broken out nicely. All right, so you got a flag broken out. So this is the correction which is just setting up over there on the euro dollar on 1 hour time frame. Okay, so you are looking this move when market gonna open and price to break below this area. Yes, if it is going to break below that, it's a hell of a move. All right, so it's a decent, you know, decent pips are over there. Okay, and in best case scenario, as I said, I'm not anticipating a quick drop all the way back to that low, but in case if it's coming, then you are targeting that previous low 1120. All right, so you are simply looking this move. All right, so the move you are already having on the pound dollar. Okay, so back to that previous low. So hope that makes sense. So if I'm gonna look at the lower time frame, all right, and gonna talk about that. Okay, so you are simply looking this correction, which is, so as I have explained on the DXY, so this is going to be the opposite. All right, so price slightly can, you know, go higher. Okay, test that previous top. You are watching that top to hold, price to not break out that top. All right, hold that previous top and significantly go lower. Okay, so sharply go lower. So drop, okay, drop or breakout from current price, okay, and continue to keep dragging lower all the way back to that previous low. So this is the move you are looking next week. Okay, bigger daily time frame is clear, moving averages to hold that and price not to go beyond that. All right, so just a second, lads. Okay, the trend line breakout is very less likely. All right, so they have, okay, so we're gonna talk about that. Just hold on, we're gonna talk about that whole chart. So we're gonna talk about the pound dollar too. So there is the pound dollar. All right, so pound dollar slightly has changed on lower time frame, okay, and it went for a bigger correction, okay, but that hasn't changed the bigger structure or bigger, you know, daily time frame chart. Okay, so this daily time frame chart is still bearish. Okay, as I have explained in the previous video analysis, that weekly market outlook analysis, that we are expecting pound to go there. All right, so there is a huge room on the pound dollar to drop. All right, so Bank of England has already raised the interest rates. All right, the higher the rate and the higher the rate's going to be, all right, or the quicker the central bank's going to raise the interest rate. Okay, all right, so they're going to expose their cards, we can say that. All right, and when they're going to expose their cards, so currency start to price in before we see, you know, hikes. All right, so if I'm gonna, you know, talk about in a different way, so if I'm gonna, you know, open my calendar and gonna filter that, none, and gonna look at the New Zealand, we're gonna open the central bank. All right, so and gonna go to the, you know, there. So look, so we're gonna have rate decision on 23rd of February on the New Zealand dollar. All right, so if I'm gonna look at the cash rate, so they are right now they are having, you know, the actual rate is 0.75 basis point. All right, so before they were, you know, they raised the interest rate on 18th of August. So before Bank of England, before, you know, before any other, you know, major central bank. All right, and New Zealand dollar was very, very strong currency at that time when, you know, sound should be there. So do you hear? Yeah, sound is there on the TV. Sorry guys, if sound wasn't there, so sound should be there on the TV too. Okay, so what I'm saying that in August, you know, market was expecting that they're gonna raise the interest rate, okay, but they didn't. Then they raised the interest rate in October. All right, so New Zealand dollar was the strongest currency at that time. It was the strongest currency when RBN was saying that they're going to raise the interest rate. So they raised the interest rate from 25 to 50 basis, and then they raised the interest rate from 50 to 75 basis point. Okay, they are ahead of they are ahead than the other major central banks. Okay, but now their New Zealand dollar is the weakest currency, because market investors know that what they were saying, they have done that. All right, now the other central banks are preparing for these kind of moves, which New Zealand RBNZ has already done. All right, so their currencies are pricing in for these moves. Okay, so Bank of England has already raised the interest rate last week. Their interest rate is 0.50 basis point right now. All right, so pound has already done that move. Pound has priced in for that. So what's going to happen if I'm going to pull out the New Zealand dollar? I have shown that in the previous. This is what this is what New Zealand dollar was doing, right, ahead of those moves. So market knew that higher interest rates are going to come. Market was already aware that the RBNZ is going to raise the interest rate. So once they done that, right after that, market started to react to the facts. All right, and New Zealand dollar started to fall after that. Okay, so these charts are also, pound is also preparing for that. Okay, so we have seen a big daily drop over there. So these charts are still behind that. Okay, so if I'm gonna, the pound is still behind that. So has that changed this bigger structure or bigger daily chart by having change on lower time frame? Has that changed? All right, no, it hasn't changed. All right, so the bigger picture hasn't changed yet. So yes, on lower time frame we can say that the 1 hour time frame chart has changed. All right, but market hasn't changed the bigger picture, bigger time frame analysis. So hope that makes sense, guys. So what market has done, or what pound has done over there on lower time frame, the correction which we were talking about in the previous weekly market outlook, price has gone beyond. All right, so this correction has gone beyond that, broke out that top, but still is it is it a buy on the pound against the dollar for more upside? No, it is not a buy opportunity for longer term for upside on the pound against the dollar. Okay, so what you should look for, this to just keep dragging more lower all the way back to that previous floor. Okay, and in best case scenario, pound to break this previous low in longer term and visit that previous 20 October lows, where the other pairs are sitting right now. Like New Zealand dollar is just sitting at that date. Australian dollar is also sitting at that date. All right, so pound is also a risk on currency, hasn't broken that previous low for that 20 October lows. All right, so CAD has to do that. All right, pound has to do that. So a lot of potential going to be over there on these currencies for longer term. Okay, so that picture hasn't changed. So what you are looking for the next week, all right, on lower time frame, so we may see simply when market open, you are looking, we were expecting this breakout too. All right, so this is the move has happened over there during the Bank of England rate DCM, and we were already aware about that. Pound is not going to continue for more upside. Okay, we knew that the pound is going to break down because it has priced in a lot already. All right, so when market was setting up for rate hikes, all right, so these are the charts which I have just shown you. Okay, that was the buy at that time when pound was sitting over there for that move, when pound was setting up for higher interest rates. So what you are expecting for the next week, guys, so you are simply looking for a correction over there, which is just setting up already over there, and that correction to break down and price to visit that previous low and possible more downside all the way back to the previous low. Okay, if I'm gonna pull out my moving averages, price is just simply trying to form a correction over there. So once price gonna complete that correction, you are looking this correction to break out. This is okay, so price to stay below that top right? Do not retrace 100% of that previous top, okay, and then break down. Okay, so if this correction is not going to happen, okay, and price is going to go into a bigger correction, okay, so then we may see this kind of pattern formation. Okay, right now I'm not anticipating. Okay, so this kind of pattern formation, price can go beyond that, fall back sharply, okay, then can test this previous top at another time, and then again gonna drop back to that low. All right, so I'm not anticipating this to go all the way back to this previous top. All right, so slightly can break out this previous top. All right, slightly can break out this previous top, you know, couple of times, and then again gonna drop for the daily time frame to the downside. So this is gonna be a complex correction on daily time frame. If I'll see that is going to come, we'll you know, update that in a video analysis. All right, so keep that you know, a complex sideways market in mind as well. Okay, so right now this correction, and continue to keep dragging more lower. All right, so that's the pound. If you are still in a pound, looking pound to continue to keep dragging lower, it hasn't changed a lot. Okay, so Australian dollar. So as said last week, we were expecting Australian dollar to also, you know, go in a daily correction, go for a you know, retracement of this move all the way back to that top. All right, so Australian dollar is the bank which is, you know, right now they are, you know, super dovish. We can say that they are not, you know, saying that they're gonna raise the interest rate like other central banks, other major central banks. All right, so they're gonna do that at some point, and Australian dollar gonna start to price in for that across the market. All right, so if you are selling that at the current price, at the lows, just keep that thing in your mind that they can start hiking the interest rate as well, and Australian dollar can price in for that too. All right, so last week we haven't, you know, heard anything huge from them, so they're still holding their, you know, loose monetary policy. So what we may see, so you shouldn't chase this move. Okay, like I have said last week, all right, at these areas, you shouldn't chase the downside, okay, because you don't have a lot of potential on it. All right, so I'm still anticipating it to, you know, go for that bigger move. Okay, so all the way back to that top. So like other pairs, let's talk about in a different way. Okay, so if I'm gonna look at the euro dollar chart, or daily chart, so euro dollar went for an expanding triangle formation. Okay, like that. Euro dollar went for an expanding triangle formation. Yeah, CPI going to be very important for the next week. All right, so if we're going to see CPI, if CPI is going to drop, okay, we may see significant strength on the safe havens. All right, or we can see strength on the yen aggressively. Aggressive moves can happen over there on the yen pairs. We're going to talk about those yen pairs too. Okay, so there you see, is you have seen already that expanding triangle on the euro dollar. Okay, so we may see that move too on the Australian dollar too. So Australian dollar can test that top too next week. Okay, so when you are, you know, looking to trade on the Australian dollar for more downside, I'm not anticipating this to continue to keep dragging more lower. There is possibility that the Australian dollar can continue to keep dragging lower, slowly back to that previous low. Not expecting big move. All right, so I'm expecting it to just retrace like euro dollar has done already. All right, and once euro dollar gonna finish, once Australian dollar gonna finish the move from the top, then we're gonna look for this to continue to keep dragging more downside. So keep that thing in mind when you are, you know, trading on the Australian dollar and US dollar. Okay, so what you are expecting on it, so, you know, they're gonna calm down. These are, you know, we see those kind of uncertainties every time in the market, like Russia and Ukraine. So they're gonna calm down. So we are not going to see serious, you know, you know, things. So as said, guys, so this move, right? So this move to happen. Okay, this means that I'm expecting Australian dollar to gain against the dollar. What I have shown you on the euro dollar, okay, dollar to gain. All right. So dollar to gain on euro dollar, dollar to gain on the DXY, okay, dollar to gain on pound dollar. Okay, but the direction which I'm showing here, I'm showing to against those charts. All right, means that Australian dollar to gain against the dollar. So which means that we may not see that move. Okay, we may not see that move, and it can drag lower back to this previous low and can find its bottom over there and can go back up to the top again. So make sure you understand that, because you know some currencies are still struggling against the dollar. All right, so what we are looking on lower time frame. All right, so there is the analysis. There is the price action you should watch. Okay, so the formation which I have shown on the pound dollar. All right, so you look in this correction. All right, and that correction to not break down. Okay, this small correction to not break down, and once that correction gonna appear over there. All right, like that. This is not to break down. All right, so that too. Then the euro dollar not gonna go down. Okay, when as you're gonna see strength here, euro dollar gonna struggle at the previous top, gonna find its top. Okay, then you are looking this to aggressively rise. Okay, after having finding its bottom over there, aggressively rise. Okay, correct, and keep rising sharply all the way back to that previous top, like euro dollar has done all the way back to that top. So this is gonna be a good trade to catch in that case. All right, but make sure you trade with care on the Australian dollar for buy side, guys. Reason I have shown you why, because central bank is still dovish on it. So same goes with the New Zealand dollar. Okay, so same analysis on the New Zealand dollar. All right, so same expanding triangle formation can appear over there. All right, so we may see a significant sharp move. Okay, so I don't think so I need to talk about this chart on lower time frame a lot. All right, because I have explained what kind of formation on lower time frame. All right, so what it can drag to that low. All right, so if this is going to drag to that previous low, then the euro dollar is the chart to catch. All right, then the pound dollar going to be the chart to catch for downside. Okay, they're going to be huge room to the downside. These pairs not going to continue to keep dragging more downside sharply. They're gonna they're gonna start struggling within these areas. We may see a kind of channel like that. Okay, then these pairs gonna stay there, and then again they're gonna break out for this top. Hope that makes sense, guys. So lower time frame similar like the Australian dollar, US dollar analysis. All right, so dollar CAD. Okay, dollar CAD also went higher last week. We were expecting it to keep pushing more higher or go in a bigger correction. So last week during the non-farm payroll, we were expecting this 4-hour time frame correction to break out. It broke out nicely for upside. There was a short-term buy opportunity. This breakout, okay, and it broke out. So next week, right now we are expecting it to continue, okay, and finish its move over there at that top. All right, but there is possibility that price not gonna continue for this move for more upside. All right, and then we may see another leg lower back to this previous low, these areas. Okay, dollar can fall against the CAD. A kind of neutral analysis we are having for the next week on the dollar CAD. All right, and again, buying gonna be over there back to that top. Once price gonna fall back to that previous low or within these areas, 88. All right, so 88% retracement of this move. Okay, but again, this is gonna be a bullish buy opportunity. So if you already caught that move, you are looking this to continue, price to break out sharply that top and continue to keep rising. All right, do not chase aggressively dollar CAD at the current price for more upside, as I'm anticipating it to drop again even after having that one more leg back to that previous low. All right, so a kind of neutral analysis on the dollar CAD. All right, dollar chief, as said last week, we may see drop on the dollar chief. Okay, so we had that drop. Okay, so what you are looking for longer term picture is very much clear on the dollar chief to go all the way back to that previous top. A lot of room going to be over there, but right now market is in a sideways scenario. Okay, and again, this is not going to be a best pair again for the next week. All right, but in case if a really sharp move is going to come over there, okay, at some point we're gonna see that sharp move on the chief, because chief has already priced in a lot. All right, but rates are going higher. we may see significant drop on the chief against the yen and against the dollar at some point. So preparing for that for longer term. Okay, so if significant aggressive sharp move is going to come, then you are looking this to just break out and continue to keep pushing more higher. If not, then again test that previous low, again looking for longer term buying on the dollar chief. All right, so do not trade for this move. All right, so now let's look at the dollar yen and the yen pairs. So dollar yen, as said, longer term bearish, even though that longer term bearish may not make sense for some, you know, some traders, as we know that rates are going higher, you know, and central banks are raising the interest rate. So yen is going down and dollar is just rising. All right, so the higher the dollar goes against the yen, okay, it's just simply stretching the gap. Okay, the higher the dollar yen gonna go, we're gonna see, you know, other currencies like New Zealand dollar is dropping against the dollar. Right, New Zealand dollar is dropping against the dollar. So which means that New Zealand dollar has to drop across the market, like New Zealand dollar has to drop against the yen. Okay, so if dollar yen keeps pushing more higher, okay, and dollar and Kiwi yen keeps dropping, all right, then you're gonna see stretchy move, aggressive sharp move on the dollar yen for the downside. Okay, because that correlation is not going to break out. I have shown you the example last week, yeah, for that. So that's the reason every time when you see that the dollar yen is pushing more higher or testing the previous top, you are looking for a longer term reversal on the dollar yen. All right, and you know, expecting it to drop for a longer term to the downside. So we may see, you know, some strength on the dollar against the yen as long as Fed is raising the interest rate. Okay, once we're gonna have a couple of, you know, rate hikes from the Fed, like New Zealand, you know, like RBNZ, they have raised the interest rate up to 75. All right, so 0.75. So once you're gonna see that Fed gonna raise a couple of times, 2-3 times, okay, market no gonna, you know, react to the hawkish Fed. Okay, market gonna start you know, behaving to the uncertainties which we gonna have in the world. All right, like you know, Ukraine Russia conflict. All right, that uncertainty right now, market is not, you know, reacting to those uncertainties. Or US China, you know, conflict, market is not reacting to those uncertainties. Reason is very much simple. We are having ultra loose monetary policy. Once central bank gonna raise interest rate couple of times, yeah, any any shock or any uncertainty which gonna have in the, you know, in the market after a couple of hikes, gonna shake the market. All right, we're gonna see, you know, aggressive drop on the equities, yeah, and that can cause the yen or gold or silver to gain significantly. All right, that can create volatility in the market. So you are simply looking dollar yen to drop aggressively to the downside next week. All right, so go all the way back to that previous low. First you are looking this to, last week we were expecting it to drop, okay, from there, from this move we were expecting all the way back to that previous low. So it happened, but price again went for a correction. So next week you are looking for a sharp breakdown. All right, sharp aggressive breakdown like this kind of move or like that kind of move, specifically when you're gonna have CPI data. All right, so if I'm gonna go back to remove all those filters, all right, so CPI data gonna be on you know, on 10th of February. All right, so numbers gonna released at 1:30 p.m. So market right now is expecting that we're gonna have, you know, expectations are 0.4. All right, so if these numbers are, let me check that. Right, let me go back and check this. Okay, so there you are simply looking the actual numbers to be below those numbers. All right, so expectations. So actual numbers should be below those numbers. Okay, right now, some experts are expecting that we're gonna have 7.3, all right, 7.3% inflation in the US. All right, so if I'm gonna pull out the inflation, numbers should be there. Okay, there is the US inflation. All right, so if I'm gonna go to line or histogram, let's go to the area. Okay, so right now the inflation in the US is around 7.4. All right, so 7.4. So the right now the inflation is there, right? And let me pull out another chart. That chart should be there too. So inflation expectations, so I'm looking for that chart. So inflation expectations dropped significantly. Okay, so forward guidance for 5-year inflation expectations dropped significantly. So I don't have that chart here. So if that if these numbers are going to drop significantly, okay, so the actual numbers here are going to drop significantly from the forecast, okay, then we may see sharp move on the dollar yen or yen pairs. Okay, we may see aggressive selling over there, here, something like this previous one. Okay, so once that comes, then you are looking dollar yen to drop. Okay, so we may see strength. We may see strength on the yen pairs during those CPI data. Okay, so then you are looking at aggressive sell-off over there, it to drop. Why? Why? What is the reason? Why is that? Okay, right now, central banks, they are trying to contain the inflation. All right, so if actual numbers are going to drop, then that means central banks can be less hawkish. All right, so if they are going to be less hawkish, means that they may raise, market is right now expecting 5 hikes. Okay, then they may say that we don't need that 5 hikes. All right, let's hike it 2 times. All right, or 3 times. Okay, then that's going to be a less hawkish story for the market. Okay, then right now dollar is just simply pricing in for rate hikes. Okay, then we may see significant drop on the dollar yen. Okay, hope that makes sense, guys. So why you are looking for this to drop sharply against the yen after having lower inflation numbers. So you are looking simply strong aggressive sell-off during the CPI data, similar like that, and price to continue to keep dragging all the way back to that previous low. And then we may see another leg higher over there from the dollar yen to go back to that previous okay, then we may see that move, but longer term direction is go all the way back to that previous low, right? So that's the dollar yen, and similar scenario you are looking on the other yen pairs. Okay, so if I'm gonna look at the euro yen, last week, as I said, guys, euro yen has almost done the previous move, the move which we were expecting over there last week, and there was the possibility for this to go for another leg lower, all right, there. Okay, but I wasn't, even I was saying to you guys, trade with care for this move. Okay, there wasn't opportunity for this to go down, but the opportunity was creating on the other yen pairs for longer term. So we have seen that move. We were expecting strength on the euro, all right? So we were expecting strength on the euro, and the chart to look for that strength was the euro pound. Okay, so strength was the euro pound. This is the chart where you should look for strength on the euro, while the ECB rate, the CN. Okay, those were the charts. So it has the potential to run for longer term. Or euro CAD, I have shown that chart in the weekly market outlook. Okay, so what I was showing that price to go all the way back to that top in the previous weekly market outlook, or euro Oz and euro New Zealand dollar. All right, so euro New Zealand dollar broke that previous top because they were behind, they were lagging. New Zealand dollar was getting weaker across the market, but euro wasn't gaining against the New Zealand dollar. Okay, so we have just, you know, got some good, you know, hawkish tune from the ECB, and then they spiked aggressively for upside. Okay, or euro Oz. So euro Oz also broke out that trying to break out that previous top. All right, so where it was sitting over there at 4-hour time frame correction. All right, so that was also a continuation buy opportunity. All right, but not best opportunity. It has moved a lot, but wasn't the best opportunity. Okay, so pound Australian dollar has moved a lot way before that. Pound Australian dollar broke out that previous top, and I told you guys euro New Zealand, euro Australian dollar can continue to keep rising too. So what was the opportunity? The opportunity was the euro pound or euro CAD. Okay, rather than, you know, buying the euro yen, or euro dollar was also a good opportunity for the breakout during the ECB rate, the CN. All right, but these are the charts which can run for longer term. All right, like euro pound can run for longer term. So we're going to talk about that, what to do next. So you are looking euro to drop against the yen next week. Okay, so this bigger daily wave, we are expecting price to go all the way back to that previous low or break down, okay, for much lower price. Okay, like that. I'm gonna look at the weekly chart. Okay, so in longer term, you are looking for euro yen to break this previous low. Okay, that move to happen. So we may see some changes in the pattern formation on lower time frame. All right, so if I'm gonna look at the, okay, so this kind of formation. So if I see that is going to happen, we'll try my best to you know, update. Okay, so this kind of move, we may see 50% drop next week. You are looking at 50% drop, and then price again can test that top. I have already drawn that formation on the pound dollar chart. Okay, and then again price can test that top, or can slightly break out and then can fall very, very aggressively. All right, so this is going to be a sideways market for next 1.5 months ahead of the Fed rate decision. So if that pattern is going to appear over there, a complex sideways market, all right, still going to be a longer term sell opportunity. That's not going to change. So there is a short term opportunity when market going to open next week. So what you are looking, all right, so price right now is just simply going in that channel. All right, so price to just simply break out that channel. Okay, so you see there, the price has already done that. Okay, so I'm just telling you that, giving you a reference so that you can understand that what you are looking for. Okay, so this kind of breakout you are looking for next week. All right, so on the euro yen, so you see that breakout came over there, price never went beyond that top. Okay, so you're watching price to hold that top and aggressively break down. Okay, correct over there and go and 50% drop off this previous aggressive move, 50% drop. We'll talk about that. So or all right, or the way it has done already on pound dollar. Okay, this move you are looking, okay, this move on the euro yen. So now let's talk about the 50% retracement. Okay, so price to drop aggressively, yeah, it can couple of times, it can do on this 1-hour time frame. Okay, on 1-hour time frame it can do that way, couple of candles can do this. Okay, so it can fall, it can test that, you can see that kind of formation, and then you can see significant sharp move over there. Okay, and then continue to keep dragging more lower. All right, So you are simply looking price to stay below, slightly can go higher than, yeah, so it's not going to change that opportunity for the downside. So that breakout, so if I'm gonna look at this impulse, so the short-term trade, you are looking up to 50% retracement, all right? So this up to that area. If going to be really sharp, then go all the way back to the previous bottom, which I'm not anticipating right now. Okay, I'm not anticipating euro yen to drop all the way back to that low, this area. Okay, not anticipating. So we're gonna see sideways market before going to continue to keep dragging lower. Yeah, so from 50% retracement, we may see, you know, okay, so this opportunity first, okay, and then price can go for a you know, for another correction. Okay, and then that correction, this kind of move you can see. Okay, so ABC move, we can say that, or kind of flag formation for more upside. Okay, so there we can see this opportunity first, this opportunity, and then again it can form a breakout opportunity over that kind of formation I'm anticipating over there. Okay, this flag, and price to reach up to that 50% retracement. Okay, and then price can again go back to that top, and once price gonna go back to that top, this is gonna be a sharp move. Okay, this is gonna be a, you know, quick trade. So this is what you are looking once price gonna finish this bullish move. All right, so that's the euro yen chart, and the longer term still bearish. Okay, and 1 hour time frame or current price is a good place to watch. Okay, and on a bigger time frame, this ABC move to appear over there. Okay, this another leg of like that, another leg appear over there, break that leg, this previous low. So you can prepare your trades accordingly, and you can prepare your risk accordingly. All right, if you're short-term opportunity going to be on lower time frame. If longer term, then the leg which we are looking, that leg to break out this previous low all the way back to that, you know, up to 2026. Okay, so euro yen, pound yen, has that changed? All right, so slightly harsh pair, we can say that we were expecting it to break down, it went higher. All right, so we have seen some changes on it. All right, but we haven't seen, again, we haven't seen bigger changes on bigger time frame, as I have explained to you on a, you know, on a pound dollar chart. Okay, so it was pricing in for the Bank of England interest rate hikes. It priced in. Has that changed on a bigger time frame? No, it hasn't changed. All right, so is it going to change our view for longer term? No, it hasn't. Okay, and it is not going to change our view for longer term. So if I'm gonna pull out that, you know, fib lines on Kiwi yen, and I'm gonna pull out those fib lines here on the pound yen too. Okay, so Kiwi yen has retraced almost, you know, retraced back to this previous low. Okay, so we don't have, you know, fib numbers over there. So, you know, it has retraced lower than that 23. Okay, so it has, you know, retraced lower than that 23% of this previous move. So pound is still there at that top. Okay, it hasn't retraced up, even up to, let's remove that, those fibs. Okay, so there we can see 23% retracement is still there. So if I'm gonna, you know, highlight that too, so that you guys can see. So 23 is there. Okay, at least up to this area where, yeah, so it should go below this bottom. All right, so it should drop below, like, you know, this pair has done over there. Okay, so why we are expecting this to happen, guys? Reason I have already explained to you. Bank of England is just simply following the Reserve Bank of New Zealand. They raised the interest rate up to 0.75. Okay, but Bank of England still at 0.50. All right, and pound is just simply pricing in for that. Okay, once they're gonna raise the interest rate and gonna stop for a while, you're gonna see that lag gonna go away and pound gonna start dropping for a longer term to the downside. Okay, so that's the reason. The bigger picture is not going to change. we may see, you know, strength on the pound for a couple of weeks to months, okay? But the bigger picture, the bigger weekly or daily picture, that is not going to change, okay? So that's why we're gonna stay, you know, longer term bearish on the pound against the yen, all right? Like we were staying bearish on the kiwi against the yen. Okay, so hope that makes sense. Why? What's the reason? So has that changed the lower time frame analysis? No, it hasn't. Okay, has that changed the pattern formation on lower time frame? Yes, it has changed. All right, so we were expecting it to break out sharply to the downside during the Bank of England rate decision. Okay, so it hasn't broken out. Okay, it slightly went higher. So this is what we were expecting it to go all the way. So has this move changed, all right? Or this whole move changed the bigger picture? No, it hasn't changed that bigger picture, okay? So what you are looking again for the worst case scenario is the 100% retracement, okay? The 100% retracement of this previous move. So if it is going to retrace 100% of this previous move like that, so the opportunity is going to be still bearish, okay? The longer this is going to be the opportunity, okay? So price is not going to change that bigger picture, guys. We're still going to look for this to go all the way back to that low. So what you are looking on a lower time frame, all right? So price already trying to break out. Let's go to the 1 hour time frame. Okay, so this correction, which is just appearing over there next week, so that correction to break out sharply, okay, this correction to break down sharply to the downside, specifically during the CPI data, all right, like dollar yen. So CPI data, if it is going to break down sharply, you are looking this to just keep dragging lower all the way back to this previous low or more downside. Okay, so if it is not going to break down, so we are not going to see breakout, okay, then what you are going to prepare for this formation, similar like the euro yen chart, okay? So first of all, another leg lower, okay, this one more leg lower to appear, then price to go test that top, slightly go beyond that, okay, another sharp leg to appear over there, and then go higher, same pattern formation which I have shown on the euro yen, okay, that can test the top, okay, this leg can test the top, this previous top, this leg, once we can have that like that can test the top, all right, and then again sharply drop from that previous top and break that low and go all the way to the weekly low, all right? So if that formation is going to appear over there, that's going to be a complex sideways market, okay, complex daily correction. If that comes, we'll try my best to share it to you, okay? So has that changed the bigger daily picture? No, okay? So we're gonna stick to that, and we're gonna look for this to continue to keep dragging more low all the way back to that previous low for longer term. Hope that makes sense. Okay, so pound dollar we have already seen. NOK, all right, so similar analysis like I have made on the euro yen, all right, or on the pound yen. So longer term target, okay, so we were expecting where we have seen change, all right? So the change we have seen on the 70% retracement of this previous move. Okay, so we were expecting it to go slightly more lower, okay, like SEK has done, SEK yen has done, price to break down and break down that previous low and go there. So they were a bit strong, okay, so NOK was a bit strong against the yen. We didn't see that move. Reason, because of oil, okay, oil did not drop. We were expecting oil to drop too. Oil remains a bit strong ahead of the OPEC you know, this year. So that's causing these pairs to you know, retrace bigger, okay, rather than, you know, continue to keep dragging lower. So has that changed, all right? So has this move changed that bigger drop, this bigger drop, and break out of that previous low? No, it hasn't changed, all right? So we're gonna stick to that too. Okay, so what you are looking, simply you are looking for similar analysis like other yen pairs, the analysis which I have made over there. Okay, so correction is just simply building over there, that correction, all right? This correction is just simply building over there. So that correction to break down for another leg, all right, another leg, and possible aggressive sell-off during CPI data. If it is not going to drop significantly, all right, then another test of that previous top, sharp sell-off, all right, and then go higher, break that top, and then again, you know, price to continue to keep dragging more downside, okay, bigger sideways market till March. Again, bigger picture gonna be a bearish one. All right, so Kiwi yen, okay, so Aussie yen. So Aussie yen, we are still looking for this to continue to keep dragging lower, but make sure you are prepared for possible another leg higher. okay, we may see this move as well. I'm not looking for that move, but make sure, like I have shown you on the Australian dollar, US dollar chart, okay? So this is the structure right now. Okay, we may see that move too on the Aussie yen back to that previous top, or in other words, the move which we have seen on the euro yen. Okay, so if I'm gonna pull out that chart, so this move, okay, so that move can appear over there. So if that move is going to appear over there, this shouldn't be a surprise for you, because you already know that. Okay, so price can rise from there to all the way back to that previous top. Okay, then what's gonna happen then? Then we're gonna go in a bigger ABC move, like you see there, like that, like I have shown you on the euro yen. Okay, then there's gonna be a bigger ABC move, which gonna slightly higher than that. Okay, so which gonna start from there to there and there to there, and then again longer term direction gonna be over there. Okay, so keep that thing in your mind, guys, when you are looking euro yen, Aussie yen to continue to keep dragging lower. So that move can appear over there at this area. So right now we are not expecting that to happen. We are simply looking Aussie yen to keep the trend intact and continue to keep dragging more lower. Stay below those moving averages and continue to keep dragging more lower and finish its bearish move all the way back to that previous low, right? This previous low, that previous low. So what you are looking for, that possible change, the change which I have just shown you. Okay, so first of all, this correction, which is similar like the Australian dollar, US dollar. All right, so this correction to break down, okay, if it goes all the way back to this previous low, then go, and there you are watching what price is going to do over there at this previous bottom. If it is going to hold that, then significantly rise and go back up. All right, go back up. Otherwise, break and continue to keep pushing more lower. Okay, so they're going to be ABC move for that. Okay, they're going to be ABC move like this. On. Right, so this ABC move and another leg lower like this ABC move. Okay, this ABC move. Where that leg goes, okay, that leg can go all the way back to that low. Okay, if this leg is going to be aggressive for upside, like I have shown you the euro yen chart, okay, then price to hold that previous low, do not break down this previous low, okay, then there's going to be a buy opportunity for upside like the euro yen all the way back to that previous top. Hope that makes sense, guys. So if you don't understand that, then can't help you more than that. All right, so CAD yen is also similar like that. Okay, CAD yen can also visit this previous top. Right now we are not looking for that. We are looking for this to, you know, to test this, test that previous low, okay, and go all the way back to that low, all the way back to that low. All right, so is it possible for the CAD yen to visit like euro yen is doing that previous top? Yes, that's possible. Okay, make sure you are prepared for this structure. This is a longer term structure, longer term, you know, direction of the market. So make sure you prepare for this another leg higher. All right. Yes, extremely bullish scenario, but the reason is, let me tell you why that can happen. Okay, so there you see. So we are having a very strong aggressive move over there on the WIX. Okay, so WIX went up to 38. Right, WIX went up to 38 ahead of the Fed rate decision. 38, sharp move. Okay, that means we had a extreme volatility into the market. So that volatility can appear over there on some yen pairs. Okay, so keep that thing in. Normally we don't see when volatility goes higher, when WIX goes higher, okay, we see strength on the yen pairs, okay, but we haven't seen strength on the yen pairs when WIX index went up to 38 or 39. Okay, when equities dropped significantly aggressively, we haven't seen strength on the yen, we haven't seen strength on the bonds, we haven't seen strength on the gold, we haven't seen strength on the silver. Okay, why is that? Why, when, you know, normally the correlation which we are having in the market right now, in the normal market. Okay, when stock goes down, we see, you know, strength on the bonds. Okay, yield goes down, bonds goes higher, gold goes higher, silver goes higher. All right, yen goes higher too, dollar goes higher too, all safe havens rise. But right now that's not happening. Okay, why that is not happening? Because of policy change. Central banks are changing their policy. They are looking to raise the interest rates. Okay, when rate goes higher, safe haven goes down. People stop, you know, everyone right now knows that inflation is sitting at 7%. Okay, and yield has to catch up. Okay, when yield gonna go after the higher inflation, central bank has to tighten their monetary policy. They have to raise the interest rates. Right, when they're going to raise the interest rate, bond price is going to go down, yield is going to go higher. Right, so higher rates, you know, putting pressure on the equity market too. Equities struggling to push more higher. People are taking money away from the equities. They are taking money away from the gold. They are taking money away from the silver, taking money away from the bonds, taking money away from the yen. All right, taking money away from the chief, taking money away from the safe havens, and putting that money in cash on their balance sheets. All right, so that they can say that they can survive. Okay, their companies can survive during this hiking cycle. All right, because central banks are going to suck money away from the market. All right, there's not going to be cheap money available anymore to the companies from the central banks. All right, so they have to prepare, they have to put more cash on their balance sheet. Okay, so that they can show investor that they are healthy. All right, they are healthy business. Yeah, they can survive during this, you know, hiking cycle. So money right now, money is not coming in the safe havens. All right, so a Fengam, they have lost almost 10 trillions in last 2 weeks. So those 10 trillions haven't came, you know, in safe havens. All right, that money has gone sideways. All right, so that's the reason, you know, we are having, you know, sharp volatility into the market. All right, so main reason for the yen to not gain even on that you know, stronger wicks. Okay, so where we were on the CAD yen. Okay, so keep that scenario in mind. We may see that extreme, you know, this extreme up move as well. Yeah, that's the structure. So see, New Zealand dollar is not going to do that much aggressive move like the euro yen has done. Okay, but make sure you prepare for this scenario. Okay, so this move up to that previous top. Okay, up to 88% retracement. Is it possible for the Kiwi yen to keep dragging more lower? I'm not anticipating this to, yeah, keep dragging more lower. Another leg lower can happen. So, but after this move, okay, so after that move, yen, yes, again longer term bearish, go up to 20 October lows. So next week we may see strength. Okay, if I'm gonna remove that trend line and gonna draw that expanding triangle formation, okay, which is gonna be more sensible, like other, you know, like New Zealand dollar, US dollar. Okay, this expanding triangle formation. Okay, then again drop from that top. So hope that makes sense, guys. So what to do? Same like lower time frame, like I have explained on the other pairs. Right, so you are looking this 1 hour time frame correction, another breakout can happen, and then aggressive, you know, move for upside. All right, this is the currency which is lagging more. Small push lower can happen back to that previous low, but that's not going to change the bigger picture. It has to pull back. Dollar yen shown that, chief yen longer term bearish. Okay, so chief yen, euro yen is euro chief is rising aggressively. This has to drop aggressively for longer term to the downside. Like dollar chief needs to push more higher. Okay, so you are expecting it to drop significantly next week, specifically during the CPI data. That's going to be the target. All right, so it's a clear chart. No need to talk about that. This is also pulling back. Last week we were not expecting it to do anything except another leg lower, so it has done that. So this is what you are looking. Another push up is possible. All right, for this move. Okay, so you are looking this structure for simply. If I'm gonna look at the lower time frame, same analysis. Okay, so if I'm gonna look at the lower time frame, just to let you know that what you are looking for on the euro yen. Okay, this is the move you are looking. Okay, that's the move. If I'm gonna copy paste that, okay, this move. So how far that move goes on the euro yen, as said, the target going to be the 50% retracement of this previous move. So this is the move you are looking, which is already there, okay, on the sec there. Okay, that's the move you are looking. So as explained, okay, so as explained, the euro yen chart, okay, so this to drop, another leg lower, drop up to 50% retracement of this move, okay, and in best case scenario, keep dropping, which I'm not anticipating right now, okay, which I'm not anticipating right now. So go back up, come down sharply, break that previous top, maybe 100% retracement of this previous top for that next leg, and then again give us a weekly wave to the downside and break that previous low. So this is going to be the opportunity which is going to be over there, you know, ahead of the Fed rate decision. So till then, we're going to have a sideways market, okay, but that's the bigger structure you're going to see over there, okay, that's what you are looking. So rand going to be the chart to watch against the yen to break down, okay. Rand needs to fall up to this previous low, all right, this previous low, 70% tracement, and then we may see, you know, another leg higher. So longer term, break down this previous low and continue to keep dragging more lower. So what you are looking simply next week on rand against the yen, price is already holding that top, okay, expanding triangle formation appeared. You are looking this to continue to keep dragging lower up to 70% tracement of this previous bullish move. Oil, okay, oil slightly went higher, okay, but has that changed the bigger picture? Guys, it hasn't changed the bigger picture. We have seen some weaknesses last week on the CAD, okay, which is a good sign that the oil gonna drop in coming days to a week. So oil, as I said in the previous weekly market outlook, is it possible for the oil to keep rising for more upside? Very less likely, okay. So central banks are trying to contain the inflation, okay. So if you want to contain the inflation, governments are under pressure from their, you know, people, right? Because inflation is just simply eroding the income, low income people, right? And they are under pressure. So energy cost needs to drop. Energy cost has to drop for the inflation to come down. So that cannot happen. Energy is to just keep rising and inflation to come down. And central banks are trying to contain the inflation, all right? So both things cannot happen at the same time. I mean, central banks are trying to contain the inflation, and inflationary items are rising. So inflationary items needs to drop. Then, you know, central banks gonna have control, all right, or are gonna be credible. Okay, so oil slightly went higher. Definitely, it's a, when you are trying to short the oil, okay, there is a risk. Okay, there is a risk oil still can slightly push more higher before going to give you a big drop. Okay, so you can sell it after some price action, all right. So last week we were expecting there's gonna be a, you know, huge fall on the oil, strong aggressive drop. So last week we were expecting oil to stay below that, okay, and hold these tops. So we have seen that one more leg lower. Okay, then again we have seen that one more leg lower, but the wave which we are looking for on the oil, we haven't seen that wave yet on the oil. Okay, and I'm still sticking to that oil to go up to 65 right now. As I said, it's not making sense for some people because there is a very tight supply. Fundamentally, supply is very tight on oil. OPEC is not releasing enough oil, okay, which is causing, you know, price to just keep slowly pushing more higher. All right, is there possibility for the oil to tag the $100 from current price? There is possibility. Even I wasn't expecting oil to go up to $100 when it was there. Okay, I wasn't expecting oil to go up to $100 when it was there. Okay, What I was expecting, the worst case scenario, this one more leg, okay, and that more leg to break that top and then drag lower. So it has slightly went higher than that, okay. Now running about 94, we can say that. Is it possible for the oil to, I still believe that oil not gonna tag the $100 and gonna break down, gonna fall, you know, aggressively lower without hitting that $100, okay. But you might be wrong, guys. Nothing is just, you know, fixed in this market. You might be wrong, so you have to accept that when you are wrong. All right, so if you're not gonna accept that, that can cost you more, simply. Okay, if you're not gonna accept that you are wrong, price can keep going against you. All right, and you can hold those drawdowns for hope that market to go into your way, like then you can lose more. So when you are wrong, just simply accept that, get out from that mess, okay, and look for the best opportunity. That's it. That's the market. Okay, so you are simply looking for oil to fall aggressively lower and go all the way up to that 62 or 65 areas. Okay, so what you are looking on lower time frame, if it is going to correct for another time, okay, like for a time frame like this, okay, then you can expect it to push for another leg higher, which I'm not anticipating. I'm just simply expecting it to fall sharp. Okay, the higher it goes, the harder the price gonna fall. Okay, if I'm gonna pull out a chart, so this kind of move you are looking for on the oil. Okay, the higher it goes, it is going to drag sharply lower. Okay, so this kind of move. So if I'm gonna zoom in, this is very, very aggressive move. The Euro CAD, very aggressive move. All right, and if that kind of move is going to come, then oil gonna reach up to, you know, up to 65 in a couple of weeks. Right, so the size of this move is so huge, so I have to adjust that. Okay, so like that kind of move. Right, so like that kind of move. So either you can wait for the price to fall aggressively first, and then you can, you know, then you can join, okay, or you can try to catch the top. Okay, so catching top always risky. All right, so like that kind of move, aggressive sell-off, right? Or if I'm gonna invert the Euro CAD chart, this is what you are looking oil to do, this kind of move. Okay, aggressive sell-off, okay, and then continue to keep dragging lower sharply, okay, like that, and finish the move all the way up to 65. All right, as long as price is not giving you that move, okay, then there is always going to be a risk for the oil to slowly keep pushing more higher. Okay, but at the end you're going to see that move maybe stronger than that. Okay, maybe stronger than that. And as I said, that central banks are trying to contain the inflation, okay, then we may see significant drop like that, okay, which no gonna, you know, stop all the way up to this 20 October lows, okay, like that. So policy mistake from central banks can give you that kind of aggressive sell-off. So we're gonna see that price, it's a matter of time, $40. All right, so it's not going to sustain those higher prices. Oil is not going to sustain those higher prices. Okay, so good luck, and lower time frame, okay, and sharp aggressive move. All right, sharp aggressive move. So same goes with the crude. Okay, longer term direction hasn't changed. We're still sticking to that, at least up to this, you know, 60, 65 or 67 areas for medium to for short to medium term, and longer term, you know, 20 October lows. For next week, short-term target gonna be this previous low, yeah, or in best case scenario, this structure, okay, so all the way fall aggressively, correct, and continue to keep dragging lower. Okay, so again, I'm not anticipating it to tag the $100, but there is possibility. All right, and you are simply waiting for a very, very aggressive sharp sell-off. Okay, that sharp sell-off gonna give you a lot of potential. Okay, that's going to come. Wait for that. Okay, so Bitcoin. So Bitcoin, we were expecting it to tag that 30K mark. So it's still, you know, above that 30K mark. So as I said in the previous analysis, that it has to, let's just look at this. Those fundamentals keeps changing, all right? Okay, so we were just, you know, a couple of thousands away. It tagged that 32K, but didn't tag that, you know, previous low 29K. So is there possibility for the Bitcoin to drag and test that low? There is possibility, guys. Still, there is not, bottom is not confirmed yet. Fundamental reasons I have, you know, said to you guys, rates are going to rise. That's causing the Bitcoin to drop. Okay, as long as you know, there is a headwind from the central banks on the stocks and on the cryptos. Okay, Bitcoin may struggle. Once we're gonna have a couple of rate hikes from the central banks, like RBNZ is the best example to understand that. Okay, they raise rates, and after that, their currency is just, you know, plunging down. Okay, so similar like that. Once we're gonna have a couple of more rate hikes from Fed or Bank of England, or you know, a hike from the ECB during 2022, and a couple of hikes from the Australian bank. Okay, then you're gonna see, you know, crypto market gonna start finding its bottom for longer term. All right, so once crypto market gonna find its bottom for longer term, then higher rates not gonna put, you know, higher interest rates not gonna put more pressure on the cryptos. Okay, then they're gonna find their floor for longer term and gonna keep rising for upside. So this is, you know, this wave is about to complete, and as explained in the previous weekly market outlook, that we may see, you know, 70% retracement on the Bitcoin. Okay, this up, it can rise up to 57 or 58K, or in best case scenario, if you are a longer term holder and hoping for it to go all the way back to that top, then you are expecting it to go, so that you go that much far away, so that you can, you know, get out. So what you are watching, simply you are watching it to find its bottom on a weekly time frame. So it's trying to find its floor on a weekly time frame. Remember my old analysis, or, you know, old video analysis on the YouTube? Okay, what I was saying to you, it has to drop. Okay, this weekly wave needs to finish first before you start looking for BTC to go up. Okay, when it was somewhere there within these areas. All right, so it finished, and this means that you are going to see bottom somewhere there within these areas. Okay, so it hasn't done that. It hasn't find its bottom over there. So once, you know, MACD gonna start changing its color like that. Okay, its color like that there. So then you're gonna see bottom over there. Okay, this might be a bottom. All right, this might be a bottom, but it hasn't confirmed that yet. All right, then it's simply setting up for that move for more upside. Okay, so what you should look for, let's talk about that on lower time frame. But weekly wave, all right, this weekly wave is about to finish. This weekly wave is about to finish. Okay, you're getting help from your MACD. So what you are looking, simply, if I'm gonna pull out my moving averages, price slightly gone beyond those 4-hour moving averages. Finally, price went above that. All right, so finally price has just broken that trend. All right, and simply trying to set up for upside. All right, so trying to set up for upside. So what you are looking, the correction, which is just simply setting up over there. Okay, so this correction to slightly get bigger and break out for another leg higher sharply, like it has done there. Okay, breakout and correct and break out. Okay, and go all the way back to that previous 70% retracement, 57,000. Okay, if we don't see that correction, okay, still This chart still a neutral analysis. Okay, as I said, it is trying to find its bottom at 32k, but that bottom hasn't confirmed yet. Okay, reason I have told you guys, because of central bank, they still haven't finished their hawkish stance. Once they're going to lose that hawkish stance, okay, then you're going to see that the Bitcoin not going to listen to them and going to keep rising for more upside. Okay, so this correction to appear over there and continue to keep breaking for more upside. So if we don't see that correction and price fall aggressively like that, okay, like it has done there, okay, you see there, it went for a correction, but price did not broke out for upside, okay, and went aggressively lower. So similar way again, if it fall aggressively over there, okay, then continue to keep dragging lower all the way up to 30k. Okay, so one more leg lower possibility exists over there. So what you are watching on further lower time frame, okay, let's look at there. Yes, but it is arriving at the bottom. Okay, and we may see less selling over there, okay, because 30k is a very good price to watch. Okay, we may see rebound on the Bitcoin from 30k or 32k. All right, so yeah, so these are the moving averages you are watching on 1 hour time frame. So bigger time frame moving averages are less important now because weekly wave is about to finish. These are the moving averages you are watching. Okay, once price gonna test these 1 hour time frame, yeah, then you are watching these SMA, you're watching those. Yeah, if price is not going to hold that, then you are watching these 4 hour time frame moving averages. Hope that makes sense, guys. And okay, these 4 hour time frame correction is still trying to finish. Okay, 4 hour time frame moving average is going to come somewhere there closer to that. All right, so if it is not going to hold those 4 hour time frame moving average, then they're going to be a sharp breakout. Okay, like that, sharp breakout like this kind of, then it's going to continue to keep pushing more higher. So still a neutral analysis. Okay, we still can see 30k mark. Okay, but price is building to reverse, price action is building to reverse. That's the way you are looking. Slightly tricky if you do not understand those lower time frame price action, then slightly going to be tricky for you. Okay, so if don't wanna involve on those lower time frame, then simply stick to these prices. Okay, let the price tag these areas, then you are looking it to reverse for another leg high. All right, all the way back to that top 58 area. All right, so yes, it's trying to find its floor. So what about the other charts? Okay, other charts are also same. Ethereum is also same. I don't think so I need to talk about that on lower time frame because pattern is same. We are expecting a 70% retracement of that previous bullish move on Ethereum. BNB is also same. I don't think so I need to talk about that. 70% retracement on lower time frame like BTC. Okay, so US 10-year yield, I'm anticipating this to give us a bigger daily correction, but right now it's not making any sense to look for that. Okay, but I'm anticipating because it has to drop again. If CPI data is going to drop significantly, then we may see yields to go lower. Okay, then US 10-year yield, 2-year yield is pushing more higher. That yield is very, very sharp, aggressive for more upside. All right, and 10-year yield. So yeah, why is that? Why I'm anticipating that? So let's look at the RBNZ. So RBNZ is just simply leading the other central banks what to do. So 10-year yield is just simply went sideways. So they raised the interest rate a couple of times. They brought the interest rate up to 0.75 basis. All right, so it's just capped over there. So struggling to push more higher. We may see more strength on it. Okay, but it just simply went for us sideways in last 100 days, we can say that. Okay, so last 98 days it just simply went into weekly correction. So calm down, right? So it's struggling. So on 2 year is also doing similar way. Calm down. Okay, so after a couple of hikes, we're gonna see that yield's gonna calm down and we may see daily corrections. Okay, so yields are simply pricing in. So 2% is a 2% is the target for the Fed for longer term. Okay, I don't think so they're gonna let the yield to run anytime soon like that, right? Like this. So we may see that kind of weekly correction over there. So I don't see it will run aggressively higher above 2%. Okay, so it has to to back down. All right. All right. So yeah, up to 60 or 50%. All right. So Nikkei index. So Nikkei index is also in a in a weekly correction. Okay, like it has done there. Okay, so what you are expecting, still I'm expecting it to drop for another leg lower. All right, so I'm still anticipating it to drop for another leg lower like that, ABC move, okay, and then continue to keep rising all the way back to that previous top. Okay, 100% retracement is possible back to this previous low. All right, so S&P 500 is also similar like that. S&P 500 to keep the trend intact. Okay, so boom, aggressive move. Okay, so on daily time frame, this daily time frame last week, we were expecting it to hold these previous lows, all right, and it held, and there is still possibility that the price can drag lower for another leg on this 4-hour time frame. Okay, so you are simply looking for price to retrace on the S&P 500. Okay, so retrace up to retrace up to 50% or 60%. Okay, so this move 61%. Okay, another leg lower, ABC move. Okay, like that, ABC move 61%, and then or 70%. Okay, and then continue to keep rising. Okay, like that formation. All right, so this is what you are looking on the S&P 500. So S&P 500 to continue its bullish trend for till Fed rate decision until 16th of March. So same goes with the Nasdaq 100 index. All right, so you are looking for this to retrace of this previous move. All right, so another leg lower, best case scenario, test that previous low and then continue to keep rising all the way back to the top. Okay, daily chart, pull that previous lows, right? These previous lows, and tag that previous top. All right, so tag that top, previous top. So CAD chief is still gonna be a breakout, not a best opportunity, right? But that's what you are looking. Breakdown, continue to keep dragging lower, okay, or another leg higher, then again drop. All right, then again drop. So CAD chief, Euro CAD made that move, the move which we were talking about in the previous weekly market outlook. So we still may see, okay, so longer term, go up to 20 October, which comes somewhere there. 20 October highs, these areas, okay. So we still may see another leg lower. All right, so we still may see another leg lower. All right, so would not suggest you to chase that strength, okay, when the opportunity was there at this area. Right, yes, that's what I'm anticipating. All right, so I'm anticipating US indices to test the previous top. Okay, another leg higher. They're setting up for that. They're setting up for another buy opportunity. All right, so what you are simply looking on the EuroCAD. EuroCAD can drop for another leg lower back to this previous low. So not expecting it to just keep running for more upside. All right, but there is possibility for that. We need to see a decent correction over there for more upside. Okay, so kind of neutral analysis for this week on the EuroCAD. Okay, pound chief to drop and take out this previous low. Okay, so pound chief to stay below that top, okay, and break down that 4-hour time frame correction and break down that previous low too. All right, so euro pound to continue to keep pushing more higher, okay, and then we may see another leg lower from this previous top. Okay, so move is already happening, move is already on its way. Price is just simply bouncing off nicely aggressively over there during the ECB rate decision. So we may see ABC move. All right, so like I have shown on the euro yen chart, okay, like that. So if that comes, then price to hold the 1-hour moving averages, okay, and continue to keep pushing more higher and test that channel, ascending channel top. All right, so pound Australian dollar. Okay, so that's what you are looking on the pound Australian dollar. Okay, so we need a big drop over there, but right now if price pull back, draw back within the 4-hour moving averages like previously, okay, like I was showing previously here within these areas, if you remember. Okay, so this flat formation, price to drop, all that, and continue to keep rising. So similar again. All right, so similar again, price to fall back, okay, and another leg higher is possible, okay, back to that top or new high. Okay, but eventually we're gonna see a bigger drop all the way up to 70% retracement of this previous bullish move. Same goes with the pound New Zealand dollar. Okay, 4-hour time frame to hold, moving average to hold, and another leg higher. Okay, as long as price hold those 4-hour moving averages, then it's a bullish scenario. Okay, and short them buy opportunity for side or back to this previous top. Okay, structure is clearly showing you what to look for short term, what to look for longer term. Okay, pound CAD is also why you are looking, a drop on these charts, why you are looking for longer term drop on pound against the New Zealand dollar or pound Australian dollar when they are not making any sense to do that. Okay, that's where people don't understand that. What they are not understanding right now, we were having 25 basis point 25 basis point interest rate on pound. All right, and what we are having right now, we are having 0 point, okay, so pound. Okay, and right now we are having 0.75 basis point interest rate hike, 0.75 basis point, 0.75 interest rate on the New Zealand dollar. Okay, Bank of England raised the interest rate to 0.50. all right, so as I said, RBNZ has already done their move. They have raised the interest rate. Now who's catching? Okay, all right, so Bank of England is catching up them. Okay, so because of that, pound is pricing in, okay, against the New Zealand dollar. People are not buying the New Zealand dollar. Why? They know that. All right, they know the next move of the RBNZ. They're already aware about that, about what they're gonna do. All right, and which currency was underpriced against the New Zealand dollar was the pound. All right, when RBNZ was raising the interest rate, pound was struggling, it was dropping. Right now, Bank of England is raising the interest rate, New Zealand dollar is struggling, and pound is pricing in. So as long as Bank of England gonna keep the hawkish too, so pound New Zealand dollar and pound Australian dollar gonna stay bullish. All right, they're gonna pull back into your 4-hour time frame moving averages and gonna keep pushing slowly higher. All right, so keep that scenario in your mind when you are looking for a longer term drop on the pound New Zealand dollar or pound Australian dollar. Okay, always look for another leg. Yes, once they're gonna finish their moves, okay, once Bank of England gonna finish their move, like I have already said that, okay, then you're gonna see a bigger drop on them. So wait for them to finish their moves. Maybe next month they're gonna raise the interest rate and gonna bring their interest rate close to 0.75 basis point, like RBNZ. All right, then you're gonna see weaknesses on the, then again you're gonna see strength on the New Zealand dollar, because RBNZ gonna start saying that they're gonna raise the interest rate to contain the inflation. New Zealand dollar gonna start pricing in. Maybe Bank of England can hold on for a while, and then you can see a stronger sell-off on the pound New Zealand dollar. So keep that scenario in mind. All right, so pound CAD, not a best pair right now. All right, so we may see drop on it back to that previous low, or another breakout for another leg higher. Okay, so I wouldn't suggest you to do anything on this chart. Not a best pair to trade for the next week. Can go both ways. So Euro Australian dollar, okay, so similar analysis like Australian dollar, US dollar. Okay, so the longer term direction is the 20 October highs on it. Okay, that go there, but we may see 4-hour time frame correction on this chart. All right, so we may see, right, so we may see 4-hour time frame correction. Okay, like if I'm gonna invert that chart and gonna pull out the Australian dollar, US dollar. Okay, so the analysis is similar. Okay, so we may see as shown on the Australian dollar, US dollar. Okay, so we may see correction and that lag. Okay, so we may see correction, and price can bounce back to that 70% retracement of this euro hours chart. Okay, euro can drop aggressively against the Australian dollar. All right, so keep that scenario in your mind. Okay, so if I'm gonna make it right, so pull back to 4-hour time frame. Okay, make sure you trade with precaution, precautions. All right, so, or let's make it simple. Okay, you're simply looking for a 4-hour time frame correction to back within these moving averages. Okay, it's strong as I'm expecting weaknesses on the euro. I have shown you weaknesses on the euro. So when euro gonna drop, you're gonna see drop on euro too against the Rs. Okay, then it's not going to continue. Possibility exists. Okay, after 4-hour time frame correction, price can continue to keep rising for more upside. So you're simply watching that previous top, this previous top. All right, so euro chief is very much similar like the euro Rs or euro Australian dollar. Okay, first of all, price to finish that move. All right, this move, like euro Rs has already done that, break down that previous low, and then pull back up to that 70% of this previous move. Okay, somewhere within these areas, 100% retracement. If that's not coming, all right, then push up, tag that top, then again drop. Okay, hold those previous tops, do not break above those previous top, and then again drop. All right, then again gonna be a weekly daily setup over there for the downside. Same on this chart. Okay, so we were expecting it to when I was saying that euro New Zealand dollar to go that much far away within these, when price was there within these areas, at that time it wasn't making sense for people, right? Because it was rising and no one was expecting that that can happen. Now it is happening. Now people are surprised. So let me find an old chart. Okay, there is the old chart. Bang, got it. There is the old chart. Okay, so right from that floor, this big aggressive move is just happening right now. Okay, so another chart. I do have, you know, lower time frame charts too. All right, but I don't think I need to show those lower time frame chart. Let's just look at that daily time frame chart. Okay, so we are just taking away from that top. All right, price is just taken out that top where the eyes are. Okay, so what is the possibility for euro New Zealand dollar to do? Yes, there is possibility that the euro New Zealand dollar can keep rising all the way up to that 20 October highs. Okay, so we still may see, you know, we were expecting these corrections to continue to keep rising in the weekly market outlook, all right? And on a 4-hour time frame, as said, on the euro hours, we need a pullback. Okay, or in worst case scenario, 70% retracement, like I have shown you on euro hours. Okay, so of this previous move, so 78 to 88% retracement before going to continue to keep dragging more lower. This is the worst case scenario. Okay, but that can happen. Make sure you are prepared for that. Okay, another 4-hour time frame pullback and price to just keep rising. That's the analysis for the next week. Okay, do not chase those lower time frame corrections. Okay, do not chase those 1-hour time frame, or at least price needs to fall back within the 4-hour moving averages before you start. So setup is simply gone on the euro New Zealand dollar. Okay guys, the wave, okay, the wave, we're gonna look at the metals, just bear with me. Okay, the wave is just simply gone. Now you can either counter it or can wait for the pullbacks. TV chief is also similar, like spending triangle formation. That's my structure. Okay, I'm not anticipating this move to happen. Okay, not anticipating. I'm anticipating it to pull back for that move, all right, and continue to keep dragging more lower. Okay, so Kiwi CAD. Okay, so is there possibility for the Kiwi CAD to keep dragging more lower? Okay, possibility, but I'm not anticipating this move. Okay, like I have said in the previous weekly market outlook, we are expecting it to break out of this chart, okay, this wave. But again, trade with all precautions. Okay, I'm anticipating it to retrace all the way back to this previous top, 100% tracement, or at least 70% tracement for the next bearish wave. So what to look for on lower time frame when market open? You're simply looking these corrections. All right, so these corrections to break out. Okay, or price to stay above those 1-hour moving averages, and price not to close below that previous low. Yeah, easy. Hope that makes sense. So you are watching these places, right, these areas. Okay, price is already holding that breakout. Okay, breakout and continue and go back for another correction. All right, or you're looking for these breakouts, sharp breakouts. Right, so breakout sharply, aggressive breakout, and continue to keep rising. So it's setting up for reversal. Okay, and you are looking for reversal. So sharp drop on the oil will push this pair aggressively higher. All right, EV is just simply under price because of the higher oil prices, and CAD is just having edge of that. Okay, so this also broke out. So you're looking for this to hold that correction, okay, and breakout, correct, go back up, back to that previous top. All right, so is there possibility for for breakdown, okay, for breakdown for another leg lower back to this previous low, yes, there is possibility. So when you are looking for buy, make sure you keep this one more leg lower scenario in your mind. I'm not anticipating, all right, I'm not anticipating. As we can see that euro CAD is just simply spiking up very aggressively. CAD is already lower, okay, so CAD needs to lower against the Kiwi and Uzi too. So you are simply looking for these corrections to hold, breakout, okay, another one to hold, and continue to keep pushing more higher. Okay, what areas? These are the prices you are watching, price to hold. Okay, so and continue to keep rising the CAD. Worst case scenario is going to be the bottom. Okay, price can visit that previous low. You're watching that too. So Aussie to fall against the New Zealand dollar. All right, so go down and test that previous low. So simple analysis. Okay, euro chief is just simply spiking up. Not a best pair to look for, you know, reversal. This might be a reversal. Okay, this might be a bottom, as you know, we were expecting that to happen. Okay, this might be a bottom, but again, guys, if you are buying the euro against the chief, then always take precautions. Okay, so this might be a reversal for up to this previous top, up to 111. Yeah, up to 111. So because euro is strongly bearish against the chief, all right, so take all precautions when you are buying this. Always use reasonable risk. All right, so if price hold, as I have shown you the weaknesses on the other euro pairs, all right, I'm expecting euro to drop next week. So this pair at least needs to go into a correction for more upside. Okay, if it goes for a correction, then you are watching price to hold 1 hour moving averages. Okay, those 1 hour moving averages, and then continue to keep pushing more higher. Trade precautiously on it, but I'm anticipating it to push slightly more higher. Okay, at least up to that trend line, or in best case scenario, then price to go all the way back to that low. Okay, this move means that euro dollar to change the structure simply. Okay, euro dollar to do something else. Okay, so that means we have to be wrong on the euro dollar. All right, so dollar peso to hold that correction. Okay, so simply hold that and continue to keep rising. Dollar Chinese yuan, nothing new. Price is just simply trying to find its floor. Okay, so longer term bullish, and this channel to break out and give us a huge bullish move for longer term. And lower time frame analysis is similar like the previous weeks. Okay, price just keep dragging lower. Okay, and this short term move and longer term spike and breakout. All right, and I'm gonna look at the oil. We have seen already oil charts. Okay, if I'm gonna look at that US 30 is also similar like the S&P 500. All right, so price to like lower time frame, like I have shown you lower time frame analysis on the S&P 500. Okay, so price to pull back. All right, so Bitcoin is going to hold. Okay, Bitcoin is not going to crash or going to devalue, so going to hold in for longer term. So right now it is under pressure because of the central banks. Okay, another leg lower and then go higher. All right, so 70% retracement of this previous move. This move 70 to 80% retracement. So same goes with this. This is what I'm talking about on the US indices. Okay, you are having another leg lower there. Okay, on the German 30. German 30 is just simply dropping now after the ECB rate decision. So you're looking for the German 30 to tag that previous low and go back up. Go back up. Worst case scenario going to be is that if they're going to break down this previous low, which I'm not anticipating right now. Okay, another leg higher. Okay, so UK 100 index to fall to as the previous low, same structure like the previous weeks. Gold. All right, so gold is simply setting up for, you know, same analysis, same structure like I have shown you last week. Okay, my chart, I haven't changed my chart since then. Okay, this weekly market outlook chart, I haven't changed that. So same structure. Okay, if someone was asking what to do on gold, I'm not sure what you are doing on gold, buying or selling. Okay, it hasn't done anything different since last week. Okay, so this correction is underway. Is there possibility for the gold to go for another leg higher? Yes, it can go for another leg higher like that. Okay, and can test that previous top. So the strength which I'm talking about on the yen pairs, for that we need another leg higher on gold. Okay, or the leg which I'm talking about on the dollar pairs, okay, or the DXY, if that comes, then we're gonna see breakout of this move to the downside. So what you are simply looking, if you are looking to short gold, okay, a simple short breakout of this correction. All right, so sharp breakout needed. So at the same time, you need to see yield to push more higher. Okay, that sharp breakout comes, then gold to breakout and continue to keep dragging lower all the way back to that 1680 area. Okay, and then there's going to be a buy opportunity from that 1680 area. All right, so there is risk for another leg higher. Okay, that leg higher price can go back to that previous top 1860, but I'm not anticipating gold to continue to keep rising for longer term for upside. Okay, I'm anticipating it to continue to keep dragging lower up to 1680 because of the higher interest rates are coming. So as long as higher rates are coming, gold gonna stay under pressure. Gold not gonna do gold not gonna do unusual things. Yes, if central banks are going to make a mistake, they are going to lose their credibility to control the inflation. Okay, then we may see strength on the gold. Okay, then gold gonna simply break the correlation. The correlation, gold, gold is a inflationary hedge. Okay, when inflation goes higher, people start buying the gold. Okay, what is the risk? What is the the credibility issue right now Fed is facing? Okay, the credibility issue is that if Fed is going to be, central banks are going to be too aggressive. Okay, what that can do, that can slow down the growth, growth is already slowing down. Okay, and that can that can drop inflation significantly. All right, that inflation can drop very aggressively. We may see deflationary move then. Okay, what that deflationary move gonna do, that deflationary move gonna drop the stock market very aggressively to the downside. Okay, we may see crash, worst case scenario crash on the stock market. Okay, that worst case scenario stock market crash gonna give strength to the gold. Okay, that time we may see correlation gonna break. Okay, so inflation, we may have deflationary shock because of the too aggressive policy from central banks. All right, too tighten. All right, that too tighten policy can drag the stock market aggressively lower. Okay, normally when we see deflationary shock in the market, okay, gold goes down. Okay, gold, you're not gonna see gold rise. Gold gonna rise when we're gonna see inflationary, central banks are trying to create inflation. All right, so then after that deflationary shock, we may see next run on gold. Okay, that's a worst case scenario. All right, or if we are going to see stagflation problem, yeah, stagflation issue, if inflation is going out of control from the central banks are going to react to less aggressively. Okay, that can cause the inflation to run away from them, from central banks. That can cause the gold to run for another leg higher too. So these two possible scenarios can let the gold to run for another leg higher. Okay, less aggressive policy from central banks, or too aggressive policy from central bank. These two possible scenarios can. Okay, why deflationary shock? Okay, if we are going to see deflationary shock, that deflationary shock gonna push the gold lower, and then again central banks gonna try to create the inflation, gold can run for another leg higher. That's the first scenario. Or the second scenario is that if we are going to see stagflation kind of scenario. Okay, if inflation is going to run away from the or let's say if US Russia is going to involve in a conflict in the Ukraine, okay, that can, you know, let the energy prices to oil to go more higher. Okay, if oil rise significantly, go beyond 100 or 120, all right, so that can create this stagflation kind of scenario. All right, then you can see that the gold can break out for another leg higher. Okay, then gold not gonna wait for the stock market to crash, then gold gonna just simply follow that you know, higher inflation. All right, higher inflation, gold was running way before that, way before we had 7% inflation. All right, now gold is simply preparing for a deflationary move. Okay, so 1680 is possible for a while. Okay, and then we may see, you know, buy opportunity from 1680 for another leg higher. Yeah, back to this previous top, or I'm not anticipating gold to go to that 2100 top anytime soon until fundamentals developed or that. All right, that's the goal, guys. Similar, silver, we were expecting silver to drop. Okay, so silver dropped, so silver can hold, okay, these lows for a while, can stay sideways. I'm anticipating silver to drop too for longer term as rates are going higher. Okay, so for a while, just keep trading within these sideways markets, sideways prices. Okay, so copper needs to drop too for longer term. Okay, similar analysis, similar structure like last week, hasn't changed a lot. So lumber is going down. Okay, so I'm expecting lumber to keep dragging lower. Okay, at least up to this previous low. So let's look at the corn. Okay, corn to drop too. As you guys know that central banks are trying to contain the inflation, the longer term trend on commodity is going to be the bearish. Okay, cotton slightly went higher. All right, so I'm simply expecting this to drop too for longer term. Okay, so they are rising, so if you are trading on them for the downside, make sure to trade with care because the trend is really strong. All right, so trade with care. Okay, same goes with the soybean. So soybean to drop too. Okay, so you are simply watching these previous highs on this soybean for this bigger move to the downside. So wheat to drop, right? So these were the commodities. Okay, now let's look at some small caps. Okay, so small caps to rise too. Okay, so similar like the US indices, lower time frame correction, 70 to 80% tracement on lower time frame. Okay, and price to continue its bullish trend. All right, so US Russell too. So US Russell is more bearish than the other US indices, so trade with care. Okay, that's what I'm looking for, another leg higher. Okay, so Russell 3000. Okay, another leg lower on lower time frame as shown. Okay, and then continue. Euro stock is also setting up for that lower time frame move. Okay, so price to hold these previous areas and continue to keep rising for another leg higher. Same goes Franc 40, short term, another leg lower. Okay, price to tag that previous low. Okay, and continue for another leg higher. Someone was asking for the Nifty. Okay, so Nifty to drag slightly lower this previous bottom or this low, okay, like other US indices, and then continue its bullish trend for more upside. All right, this is what you are looking for. All right, so some individual stocks. So let's look at some individual stocks. Okay, so Tesla is just simply struggling. Okay, so we may see, you know, short-term buying on the Tesla. Okay, this move, price this move. Okay, all right, so this move gonna give you new highs on the indices. Okay, this move. another leg higher back to that top. So Apple, let's just remove that. So Apple to stay trending simply. Okay, for short term. So I'm showing 2-day time frame chart, all right? So do not continue buying at the current price, all right? So another leg lower, like I have shown you on the indexes. Yeah, so one more leg lower and then hold, and then these charts to continue its trend, okay, within these areas. So these areas, that leg. Amazon is also similar, okay, we were expecting that to drop, all right? So it dropped and then finding its bottom over there. So you are simply looking these areas, okay, these areas to hold for another leg higher. So you know, these individual stocks, so Nvidia is simply crashing, more downside is possible. All right, so more downside is possible. We may see, you know, more downside on these, okay, for don't have a perfect opportunity right now. Okay, Alphabet already made that move, the move which I'm showing you on other individual stocks. Okay, so this is the move you are looking on the Alphabet. I mean, the move you are already having on the Alphabet, that is the move you are looking on the Tesla or the other individual stocks which I have shown you. All right, that kind of move, that wave. You're trading on them, then this is what you're expecting. All right, so Facebook, Meta. Okay, there is possibility that Meta can drag more lower, but this is going to be a lifetime opportunity for you. Okay, so let the Meta to drag up to March lows. Okay, it can drag. It's not making any sense for anyone right now, Meta, to go that much far away. Another $100 drop. Okay, another $100 drop is not making sense. Okay, and yes, all right, and yes, it can find its bottom somewhere at the current price and continue to keep rising. It can find its bottom over there, all right, and can continue. But right now there is no logical reason for it to continue to keep pushing more higher. All right, so you are simply looking for, okay, I mean, this is not the best time to buy the Facebook right now, but yes, this is gonna be a, you know, lifetime buy opportunity on the Facebook. All right, so I'm gonna look at that chart. Okay, look at that, how aggressively it went higher, right? So that chart, so it went higher so aggressively. So you are, you know, simply letting it to go more downside, okay, and let that to visit that previous low, right, and then look for it to rise for longer term. It's a worst case scenario, the worst case scenario I'm anticipating, and yes, that worst case scenario is very much likely on the Facebook, like Netflix. Okay, so Netflix is testing the, it has broken down that you know, March lows. All right, so yeah, the March low is there. The Netflix is just, you know, about to tag that, not the March low. So you can see that too on the Facebook, right? So Facebook can also, you know, drop more lower before going to continue to keep pushing more higher. But yes, this is going to be a, you know, lifetime buy the dip opportunity on the Facebook. Okay, so if I'm gonna look at some cryptos, Solana gonna be a buy opportunity for longer term right now. Another leg lower possibility exists over there. All right, like I have shown you on the Bitcoin. Okay, this is the structure. All right, so same on others, like last week. Stack can drop to for another, like they haven't changed a lot since last week. Okay, so ADA can drag more lower. Terra is dragging, okay, so can drag more lower before going to rise. Sand, all right, so Sand can go down for another leg. Okay, this is the formation, that's the structure. Okay, another leg lower is possible on this hand. That's the structure. GTX can stay sideways, can sit at the bottom. We may see another leg lower on KuCoin before we're gonna see. Let's just look at these charts in a different way. All right, so money moves Bitcoin. Okay, when people buy, they put their money in, they move. All right, there is nothing else. All right, so let's look at them this way. All right, so KuCoin, that's your KuCoin structure. As Bitcoin is trying to find its bottom, then okay, so we're not gonna see, you know, big drop on these coins for more downside. Once Bitcoin gonna find its bottom, it's trying to find its bottom at 80K. All right, so you should look for these coins to stay trending. All right, Dogecoin went for sideways. All right, so another leg lower, similar like the previous analysis. All right, so I'm gonna ignore Phantom. All right, so Phantom to go at least up to this previous low, like you know, Bitcoin test that low and then rise. So OITA, same analysis like last week. All right, so test that previous bottom and then continue to keep rising. All right, so let's just finish it at XRP to hold that bottom and continue to keep rising for more upside. Okay, so let's just finish here. Enough for this week. Hope that helps you. All right, hope that helped you. So we'll see you back again in another weekly market outlook, guys. Is there question at all? All right, we'll explain next time. If you are not comfortable with crypto and don't know the fundamentals, do some research. You go to your Google and find it over there. All right. Okay, guys, let's just finish here. So we'll see you back again in another weekly market outlook. Until then, bye and have a great weekend.